Gioia, just doing a quick sound check. I'm going to need just about 2 minutes to load up my presentation, and then we'll get started.
That sounds great, Michael. No rush. Take your time. Want to make sure that you're comfortably set up and ready to go. I tell you what, since Michael needs a couple of minutes, folks, now might be a great time to go grab a refreshment, use the facilities so that you can be back and ready to go when Michael's ready to start his presentation. So the market, just looking at my charts here for a moment, has been on a wild ride. If you remember, we got started this morning at 8 o'clock Eastern time. And if you'll remember, we had Scott Andrews here from Master of the Gap. And at that point in time, I think we had an opening gap where the market, the E-mini S&P was down more than 20 points. Well, it's now down 5 3/4 points and looks like it's trying to close all of that gap. So that's pretty amazing. I see that the E-mini NASDAQ certainly did that, and the YM is trying as well. So quite a swing in the markets today. And if I seem to recall, I think Scott also entered a trade long in the E-mini S&P somewhere around, I think it was 1952 or so. He was looking for 4 points and risking 4 points to make 4 points. And if that in fact is what he did, he certainly made out on that trade. So pretty crazy day. Let me take a look at what else is going on here. We can see that gold's fallen off a little bit, but it's still up, trading right around $1,338 an ounce. Crude oil definitely also spiked up here, in particularly right here, right around lunchtime, 11:30. It really took off, trading up now near $103 a barrel. Crude oil pits have just closed. And so just another interesting wild day on Wall Street, but it's nice to see some of this volatility because the markets have just been rather sluggish and sideways moving over the past several days. So we're going to have a little bit of a change in accents, as you could tell. Our good our good friend Gavin joining us from London. We noticed that pronounced British accent. Some thought potentially Australian. As he mentioned at one point in time, he was actually a policeman, and from that standpoint, and now we go all the way across the Atlantic to New York, and we're going to have Michael joining us. And I detected that he has a slight New York accent, very, very slight, I think. Okay, I can see that we have a slide up. And once again, Michael will be joining us shortly, folks. KB says, sounds like I'm from Texas. Actually, I'm speaking to you from Austin, Texas. And I've lived in Texas for right around 18 years, but originally I'm from the Mid-Atlantic. I'm from Washington, D.C., but spent pretty much the last 17, 18 years of my life down here in Austin, Texas. My business travels took me down here, and we liked it and decided to throw the anchor overboard, toss the engine overboard. And I traveled a lot during my life, and we decided that this would be where we would make our home on into the sunset, as it were. Okay, so now you know a little bit more about where I'm from and where Michael's from. Where are you from? Where do we have folks logging in from here today? I'm kind of intrigued as to find out who is the greatest distance from Austin, Texas. Because I know we have a very international group here. We have Dublin, Fort Worth. So Dublin so far. Dallas, it is a little close. Switzerland, okay. Starting to stretch out there. Uh-oh, Perth, Western Australia. That could take the cake. Zurich, Arizona, Washington, D.C. Okay, Chicago. Oh, you all can see that. Great. From New Mexico. Qatar, okay. Middle East represented. Israel, Yossi. Good. So I'm glad that we have an international flavor here to the room as well. Los Angeles. So I think we have all time zones in the United States covered, and we have several people internationally, one from as far away as Perth, Australia, where I know it is early in the morning. Also Singapore here. Okay, wow. All right, we have charts. Yeah, Steve says it's tomorrow morning. Yes, it is. Yep. Stateville, Joliet, Kansas City, Louisiana, St. Louis. Good crowd of folks. So Jillian asked Steve, since it's tomorrow morning already, how is it in the future? That's excellent.
Hey, Raleigh. It's Mike here. How's everybody doing out there? How you feeling?
Michael, we're feeling good. How you feeling?
I'm feeling great. Feeling great. Very good and active day in the market.
Yeah, absolutely. It's more volatility today than we've seen in a long time, no doubt.
Yep. So I'm looking forward to getting started here. Should I just take it from here, or do you?
Absolutely. I've introduced you,
to,
Mike. I've given you a nice build up there, and the stage is all yours.
All right. Well, thank you very much. I really appreciate that. How many people here in the room? And guys, I like to make things as interactive as possible. So the more you respond and the more interaction, the more education and the more content that I can give you. So how many people in here trade stocks? And if you trade stocks, write stocks. If you trade options, write options. If you trade futures, write futures. If you trade Forex, write Forex. Okay, good. So I see my ticker. I've made you guys into a stock ticker, okay, of all the different asset classes that you trade. Very, very cool. I see lots of stocks. Well, guys, listen, I trade anything that moves, okay? My partner even trades Bitcoins. I mean, if it's moving, we're interested in trading it. However, since I am from New York, as Raleigh pointed out, you can't mistake that accent. Since I am a 100% tried and true New Yorker, My origin is in stocks and in options. And really, as a trader, we always trade where we feel we have an edge. Okay? And as a trader, we're always looking for that one or two good trades, and obviously to lock in our profits, ring fence our profits, and to maximize our possible rate of return without risking too much. Okay, and really anybody who's traded for any period of time can tell you that what their real concern is not so much how much we can make, but it's our risk. Okay, so a lot of what I teach at the Affinity Trading Institute is about risk, and my slides just finally loaded up. Okay, so I'm just going to pop these on the screen. Now the difficult part is to find out of all the many slideshows which one is mine. Okay, and I'm going to talk about what we do at the Affinity Trading Institute. Okay, the Affinity Trading Institute, we try to focus on teaching consistent trading strategies that are classic trading strategies. Okay, so what do I mean by classic trading strategies? Classic trading strategies are strategies that work, okay, through various different market conditions because they're based on some concept that is innate to the market. Okay? Now, I'll give you an example. Gap trading is considered a classic trading strategy. Can anybody tell me why? Why would gap trading be considered a classic trading strategy? Okay? Just for the sake of time. It's worked over and over, absolutely. But as long as there's a gap up in the market or a gap down, as long as there's an open and a close, okay? As long as the market closes at one time and opens at another in the equities market, you have the opportunity for an imbalance, okay? And the very nature of the market, okay, is to move from an imbalance back to balance. From an imbalance back to balance. From balance to an imbalance, right? It's a breakout. Okay? And really, today could not have been possibly a better trading day for a trader such as myself. Because we had a catalyst. Guys, what was the catalyst that caused the imbalance going into today's U.S. equities market? We kind of had two catalysts. We had Portugal, we had some news over in Europe, and then we also had, well, yesterday we had the Fed meeting minutes, and what was the other thing we had? We had some negative, guidance for earnings, right? So there's some guidance coming out on the U.S. equities earnings, but to put that on the table, negative news from Europe set the tone, and that caused a big overnight imbalance from which the market swings back to balance. Okay? So that is a great example of a classic trading strategy. And it's one of the things that I've been trading since the very beginning of my trading career. And guys, I'm going to tell you a little bit about myself after I go through the standard disclaimer that is part of every trading seminar. But I do think that as an industry professional, I do think that we need to stress these points, which is trading can result in losses. It should be approached in a prudent way. The examples that we show are for educational purposes. And of course, you guys can emulate or try to emulate these examples and these results. But the best thing that you can do is invest in yourself, get a great education, which obviously you're doing since you're here, okay, and approach the markets in a prudent way. And enough about my disclaimer. Well, let me tell you a little bit about myself. Okay, I'm a native New Yorker, as you can tell from the accent. I grew up in New York's financial Wall Street community. I do have a connection to Europe, so I did go to the Università di Siena in Italy, and I also went to the Scuola Economica for Prague in Prague, so I have spent a fair bit of time in Europe. So I do have my, although I am a native New Yorker, I do have my roots and my origins firmly rooted in Europe. I've been a trader, a risk manager, a market maker, and of course now I am a trading desk manager. And I run the Affinity Trading Institute. I founded the Affinity Trading Institute. We also have the Affinity Trading Group. Okay, we don't just trade, we put our money where our mouths are. That means that we actually trade the strategies that we talk about and we teach. I founded my own educational company in 2005. I have my Series 7, 63, 55, and 24 licenses. That my Series 7 is a general securities representative license. I know there's a lot of international people. Series 63 allows me to practice in every state in the country. Series 55 is a market maker's license, and the Series 24 is a principal's license. Okay? Now, what are we going to talk about? Okay? Our training. I'm going to tell you how we train people. Okay, and guys, our training is very, very much a training program that is exactly like the roots that I come from. It is the training program that comes from a Wall Street professional trading desk. So if you've ever wanted, for people who are in Europe and there's really, or in Asia or in the United States, but not in New York, if people wanted to get trained the way that I got trained when I started my career on Wall Street, they could get trained the same way that I did in a virtual way. And that was really the idea behind me forming the Affinity Trading Institute. I felt that there were a lot of training companies out there. However, most people get interested in the stock market from a retail perspective. My interest in my success as a trader was not from a retail perspective. I came in, I wanted to learn from successful traders. So where do I go? I go to Wall Street. And I get on a trading desk. And the guys are making money around me. And all I had to do was emulate the guys that were around me. And it was a very, very direct and practical way to learn how to trade. I am a pragmatist. I like to teach, and the things I'm going to be teaching you about are the breakout setup. Okay, I'm going to talk to you about the breakout, the breakdown. I'm going to show you actual examples of the breakout and the breakdown. I'm going to give you an intro into gap trading, which there couldn't be a better day, okay, for a gap trading, presentation than today, because I mean, really, today was all about the gap. I'm going to talk to you about, shorting rallies and buying pullbacks, which is really a tried and true directional or trending trading technique. I'm going to show you a little bit of the tools that we use to train our people. And guys, look, obviously, if you want to join our programs and our classes, we're going to have an offer for people to get a free trial of our services. We are primarily day traders, but we are also swing traders. Okay, we're going to give you a lot of real life examples, and then I'm going to tell you a little bit about our program and how it works and what we do. So without further ado, I'm not going to spend a lot of time on our training. We break our training into a 9-day program that's repeated with free retakes. We believe that trading can only be learned by doing. Okay, and that means that the trading success pie chart, a sliver of it is that 2-day class. A sliver of it is the 2-day advanced class. A sliver of it is the 5-day online lab. A sliver of it is being in an online trading room where we call stock trading ideas and options trading ideas each and every day. A big chunk of it is the coaching, okay? And I can't stress coaching and risk management enough. I also can't stress that we also have access to trading capital, because very often one of the things that I've seen is that people are just getting good at trading, and all of a sudden they're getting good at trading, and they're out of money because they've spent a lot of money on maybe education going down the wrong educational direction. Maybe they've spent a lot of money, learning trades, right? We have learning trades before earning trades. Maybe they've spent a lot of money on just expenses, and their living expenses have worn them down. So what we've tried to do is provide a complete trading solution for everybody who wants to learn how to trade professionally, possibly for a living, or maybe just to earn some extra money. Now, the way that we do things, we teach intraday trading styles and swing trading styles, and I have a very good friend. I saw that she's a good friend of mine, is Anka, is going to be doing a presentation later tonight, so it was good to see Trade Out Loud on this. She does a great swing trading service, and she's a great educator in her own right. But we also do some swing trading, and we have swing trading services like the stock play of the week, the options play of the week, the options trader. We also have two great trading rooms, the Legends of Wall Street trading room, as well as the Affinity Trend Fund Ninja trading room. And we teach trading in a very, very...
Good afternoon.
Sorry,
Before
guys.
I go into a rant that could last an hour and a half.
That's one of my other trading rooms going. Sorry about that. That was the Legends of Wall Street trading room that just started going now. So the way that we teach is a little different than most. Okay, we teach things by style. And notice that there's a nice little chart here. So one of the things that we teach is called relative strength trading. And the real crux of relative strength trading is what? Okay, if I could sum up relative strength trading into a catchphrase, it's almost like gardening. Okay, now you guys say, well, how is this guy using an analogy of gardening and applying it to relative strength stock trading? Okay, so relative strength trading is composed of picking the weeds and watering the flowers. You want to go long the strong, okay, and short the weak. Okay, and the objective is to carry the position while hedging and adding and taking profits at key points. The size of the move that you're going for generally big to intermediate sized trending moves. Okay, the key factors are selection, direction, and management. Okay, the commission rates have to be applicable to the style of trading that you're doing. So you need a low minimum ticket and a low cents per share, and you need a high trader payout if you're prop trading. Okay, in terms of directional day trading, okay, for directional day trading, you need to look for low risk, high odds, technical opportunities to achieve your daily target. Okay, and it depends on the price of the stock and the tactic that you're taking. Okay, so in technical day trading, the best analogy that I can make for it, it's like being a sniper. Okay, for technical day trading, you want to be a sniper. And sometimes being a sniper is sitting there waiting for a long period of time for that specific opportunity and to pull the trigger at that opportunity at that point in time. Okay, now we have a couple of defining factors or key factors, which is setup, trend, pattern, trigger, stop, and target. The next one that we teach, and I love gap trading because I know exactly when it happens each day. Gap trading happens each day right on the opening gap of the market, right on the open. And the open is at 9:30. Okay, so the idea behind gap trading is looking to try to capture fades, okay, and what we call gap and goes. And I wanted to bring up an example of a stock that was a beautiful gap fade and a beautiful gap and go. And I'm going to bring up the chart right now. So this is a great example of a stock that was really, I mean, this was my day maker. It was UAL. Okay, so if you look at the daily chart on UAL, the stock gapped up. Okay, and on the gap up, all I had to do was to measure, okay, what it did in the first 5 minutes. And I'm just going to zoom back to the first 5 minutes of the day. Okay, and what I could do is I could actually measure it So this is the 1 minute high. Okay, there's the 1 minute high. So there's the 1 minute high. It faded for a minute, then it went up and it broke the 3 minute high. Okay? Okay, so that's a great example of a 3 minute high break. Now, if you want to be a little bit more cautious, you get a 5 minute high break, right? So you get 1, 2, 3, 4, 5 minutes. By this point, it had already broken out. So you would have been buying the momentum on that 5 minute high break. Okay? Now, this little pattern that we have here is called a 1, 2, 3 continuation. So you could have taken the 1, 2, 3 continuation, but you'd have to have taken it as a scalp or been in and out fast. Now, I actually waited on this one. I waited for the pullback, the trend line break and fade, okay, and then took the buy setup. I actually, I actually stopped out of a few shares just to cycle through some shares because it may not have, continued up. And then there was an add up, okay, an add back in. And then sure enough, the day was off to the races. Okay, so your first technical target is here, and I'm going to talk about taking trades to riskless. Okay, first technical target was here, the high from the morning. And then, of course, we have a beautiful ascending triangle. Okay, beautiful ascending triangle. And then we have a nice continuation up. So we consolidate, low volume on the consolidation. We get a breakout. Okay, there is a beautiful example of a breakout. I'm going to be teaching you about the breakout setup a little bit later. Okay, we get a breakout, and then we get a secondary breakout, and then you're just stair-stepping up all day long. Now, you do get a 5 minute buy setup right there. Another setup that I'm going to teach you here in our little free workshop. So I'm going to teach you what the buy setup is. Okay, and then the next thing I'm waiting for is I'm waiting for maybe a late day breakout. We'll see if it continues. We had a nice little buy setup there. That was a late day continuation. Maybe we're going to get a late day breakout. However, there is one thing that has happened, is that now we have finally hit some daily resistance. And guys, the daily chart is the most important time frame for day trading. So the daily chart, does provide significant resistance. So when we hit into that daily resistance, that's the reason this stock has stopped. All right? Now, guys, I'm going to give you more stock examples in a few minutes, but I want to give you a sense of the realness of trading. Now, here's another stock that one of my professional prop traders traded. It's SRPT. Okay? So here's SRPT. Okay, here's SRPT, and I'm just going to show you the actual executions on SRPT. Okay, so here are all the actual executions. Okay, this is a professional prop trader, and he took one trade for the day. He did a total of 25,000 shares. He made himself $1,500. Guys, there's not many jobs where you can log in at 9:30 in the morning and you can be done by 10:05 and spend the rest of the day playing golf. And guys, this guy actually does own a golf course. So he really is probably playing golf. Okay? But he is a professional prop trader, and he also owns a golf course. And he's, I think he's got a pretty nice, comfortable lifestyle. And guys, I like to say that trading is the hardest way to make an easy living. Okay, and that's exactly the best way to put it. Trading is the hardest way to make an easy living, meaning it can be very, very frustrating. Okay, but when you get it and when you do it well, it's a great way to make a living. Okay, so there was a question because there was no real gap with UAL. The chart you extended the hourly session. No, the gap is off the daily, my friend. So the gap is off the daily, and I'll show you where the gap was. So on the So this is on UA out. The play is called a gap and go. Okay? So the stock, and I'm just going to put the lines on here. Okay? The stock closed here. Okay? So this is where the stock closed. And then this is where the stock opened. So that's the gap that occurred from one day's close to the next day's open. Now, the reason this is considered a bullish gap is because it gapped beyond this day's bar. Okay? So it gapped beyond that day's bar. Now, gap trading involves trading daily bars, daily candles, but then intraday trading them, okay, on a 1 minute, on a 5 minute, on a 15-minute chart to execute the trade properly. Okay? So that's what I mean by gap trading, and we're going to cover that more in the slideshow. All right, so in terms of the way that we feel, and the way I feel, the way I know you need to be educated, you need to create a smart plan, okay? A failure to plan is a plan to fail. I'm sure you guys have heard this many times in trading seminars. Not having a plan is just a great way to fail in any venture, not just trading. Something that's so complex like trading requires a plan because, you know, there's an expression in war that says that no plan survives contact with the enemy. In trading, you need to plan your approach when you're not in the market. Okay, because once you get into the market, what happens is what? Okay, what happens when you start trading in the market? Emotions, your connection to money starts to take hold. Okay, so emotions take over. So in trading, you need to have a plan, and you have to have those planned responses mapped out before you go into the market. Okay, because if you're trying to come up with your plan while you're emotional and while you're panicking, okay, then your response is not going to be the right response. It's going to be an emotional, panicked response. Now, we say that the plan needs to be smart, specific, measured, attractive, realistic, and timed. Okay? So the plan needs to be a smart plan. What we require you to do is to come up with a trading plan of your own conception first. Then what we do, based on your current knowledge, and then what we do is we work with you to create a plan that is based off of our model template. Now, I don't believe that anything worth doing, okay, is worth not trying yourself first and then measured against something. Okay, that's the way I do everything. Okay, is that you need to work for stuff. Otherwise, you don't appreciate it. If I give it to you, you didn't earn it. If you worked for it, you earned it. Okay, and then you make it your own. So that's a very, very important educational concept. Okay, it's one that I try really hard to drive into my 3 children. Okay, so then we work with you to set up your trading software and your trade reports. Now, the next thing I have to say is that trade reports are very, very important. Okay, and you have to have, not only do you have to have trade reports, but you also have to have a real system. Okay, and to a certain degree, I'm a stickler for system. Okay, why? Because I know that once I quantify the results, they have a tendency to work. And I'm hard on my students. Okay, you didn't pay me, if you decide to take my class, you didn't pay me to be nice. You paid me to teach you how to trade, and you paid me to teach you tried and true techniques. And guys, when I was on a trading desk in 1998, 1999, learning to be a trader, the trading desk managers were never nice. Okay, they had to be tough as nails. Okay, they didn't take any BS. Okay, right? You could say that a little louder, Gene.
Hoorah, baby.
That's Eugene. Okay, we are here on a trading desk here in my little trading office. Okay, so we are a little bit like drill instructors in a boot camp. Okay, trading requires discipline, and discipline is learned by being disciplined. Now, I know that kind of sounds a little bit sadistic or masochistic, but the reality is that you don't learn, okay, by being, you know, Nice. You learn by having hard rules and having those rules reinforced when you need that reinforcement. Now, on that note, I want to show you one of the tools. So guys, so we help you set up your trade reports. So setting up the trading software, set up your trade reports, practicing on a paper trading demo. And I'm going to talk more about this in a few seconds. Guys, this is a report that we provide, okay, to our students that are learning how to trade. So this is a 1, 2, 3 continuation setup. This is a gap fade. This is a bull pennant. This is an ascending triangle. This is a climactic buy. This is a scalp trade. This is a buy setup. This is a flag pattern. Okay, so these are the patterns. These are the things. These are your errors, just like in baseball. These are your errors. These are your positives. Okay. Then what we do is we teach you to mark up your charts, right? So, I mean, the spreadsheet could not be easier to use. Put in the symbol, put in the pattern, put in the entry of the choices that we have. And guys, there's some styles of trading have more entries than other. Okay, so we give you the entries, the quality of the pattern, the quality of the volume, the type of trend that it is, what your exit was and what your P&L was. And then the last thing is we help you chart your results. Why? Because you don't need a lot of setups to be a successful, profitable trader. But what you do need is 1 or 2 that work. And guys, this particular brand new trader that I brought up his patterns, right, his key. Okay, what I can see is that when he trades, so far he's 5 for 5. The reason he's doing so well is because he's always trading with the trend, using 1, 2, 3 continuation setups and scalps. Okay, so he's going for small moves, which really increases your odds. Okay, and then obviously I make him mark up the charts. Okay, so that he sees what's exactly working, and that hard work and discipline really, really quantifies and reinforces. Why? Because if you believe in what you're doing and you know it works, it leads to you being like a Pavlovian dog that when the bell rings, you salivate. When you see that 1, 2, 3 continuation pattern in an uptrend and the market's trending up, you buy. Okay? Bell rings, Pavlovian dog salivates. Trader sees a trend, takes the trade. 1, 2, 3 continuation trade with an uptrend in the direction of the market. Boom, gets in, does it. Okay? So that's how we have to train your responses. First, we quantify the data. Okay? Quantify the data, train the response. Okay? That's how you teach trading professionally. And obviously, we do the foundational, the advanced trading theory in the U.S. and internationally. You also need the Series 56. Now there's the Series 56 firms are even accepting international traders. That allows you to prop trade professionally. Obviously, that's a very boring subject, so I'm not going to beleaguer the point too much. You don't also need to have the license if you're not in the United States, but most firms in the United States require the license. And obviously, you guys can email me about that. I'm a wealth of all kinds of regulatory information that I wish I didn't know, but have learned learned all about over time. All right, guys. Now the next thing you need to do is you need to paper trade for a period of time, guys. Because if you're not paper trading profitably, there's no reason for you to trade real money. Now, paper trading is a double-edged sword. Okay, and I brought up this platform. This is a platform that I invested $250,000 in. This platform is called TurboTick. It is a realistic paper trading software. Okay, so it allows you to paper trade in a realistic way and keeps track of your trade results. I like most of my students to sit on this for about a month to vet the strategies. If they're paper trading profitably, then they should absolutely move on to real trading. There is nothing like having real money on the line. However, you should not make little paper trading errors when you're not trading real money. Okay, so that you should definitely, yeah, it's the same thing. Paper trading is virtual trading, BD. So virtual trading, I invested $250,000 into this platform for a realistic equities virtual trading platform. The reason I did that was because most of the equities virtual trading platforms were not realistic, meaning that if you put out a bid at the bid price, it got filled immediately. That's not realistic. In order for the equities market, you had to simulate the bidding and offering process. Okay, and the bidding and offering process in the equities trading game, okay, is a very, very difficult thing to simulate. So that's why most of the trading platforms did not really simulate that well. And the way that you do it is that if you put out a price at 196.16, you don't get filled unless it goes through that price level. Okay, if you want to lift the offer at that price right away, then it'll go right up. Okay, you'll get filled immediately. But if you're putting out limit orders, you have to be bargaining at those limit orders, putting out those prices properly and pricing them effectively. Okay, the platform is called TurboTick. The website for that company is turnkey.broker.com. I own a small percentage of the company, but I invested in it because nobody ever wanted to make virtual trading software that was realistic. So I had to invest in the company. Now, guys, I want to show you something. So these are the trading levels. Now, part of our trading plan that we teach and I show you is that you need to have a maximum risk per trade, a maximum risk per day, a maximum risk per week. You should have a daily profit target and a weekly profit target. Now, guys, I don't require you to stay at the low training level, but there's a reason why we teach people to trade at a very small size first, because it should be about the rules, not about the reward. Okay? Now, obviously, we let people start all the way up to level 6 of the training program, and at level 6, the daily target's $300 a day, $600 at level 5, $900 at level 6. Weekly target's $1,800. Now, guys, I brought up a trader before. Okay, he did his trade for the day. He got out. He's done. He made himself $1,400. Okay, he made himself $1,400. Okay, $1,400 in a day would put him at what level? Okay, $1,400 in a day would put him up all the way at right around level 7. So 2 $1,400 days, he hits his weekly target. We also have something called the 30% rule. 30% rule is that when you make your daily target for the day, you don't go 30% off your high. So if he hits 1,500 up and then he loses down to 1,000, okay, he's got to stop no matter what. Okay? Yep, turnkey.broker.com. Okay, and that's the software is called TurboTick. It's a realistic equities and options trading simulator. Okay? Now, your need as a trader is to be gross realized green. And here's one of my better traders. I can actually bring him up. He's up for the today. Okay, this is one of my better traders. He's up almost every day, as you can see from his runs. And I'm going to show you his records. And guys, I can show you these because I am a registered trader manager at a professional trading brokerage firm in New York City. So here's one of my best traders. He's up $1,500 for the day. Now, he does have unrealized positions, $3,600, and there's a reason for that. What he does is when he day trades incredibly successfully. So here he is in PRAN. He's short 100 shares. Right now, he's long 13,000 shares of APP. That's a real trade in the real market. Okay? So when he makes money, like $828 that he made on PRAN, when he makes money, what he'll do is, since he's short that stock, he might buy the puts, okay, to extend the trade because we're prop trading. So the buying of the puts or buying of the calls, whatever he puts into the put or the call, is the maximum amount that he can lose for that swing opportunity to extend the trade out. Okay? So as a prop trader at a professional trading firm in New York, that is his tactic. Okay? And you can see he cashes out on the green ones. So what that does is it requires him to carry the red ones. He carries the red ones until they expire. Okay? So whatever he's down on, if they don't work out, he'll carry them, and then, either weekly or monthly they will expire. And that's a very good tactic that you can take away from this presentation. So if you day trade and make money, and by the way, guys, you can see him making money on that 8,000 shares that he has left. Okay, these are his actual orders. Okay, so he's doing a lot of shares, right? He already did 515,000 shares today. So he's definitely doing a lot of shares. Okay, this guy I would say is kind of between a scalper and a momentum day trader. Okay, so he's momentum day trading and scalping. And very consistent, and I can show you the degree of that consistency, because right here, from the beginning of the year, he's up 1,300, up 500, up 700, up 800, up 500. That's him pulling money out of the market. So in order for you to trade professionally, and by the way, guys, you can see some days he's trading over 1 million shares. Why is he trading less than 1 million shares? Because it's summer, the volume's less, and obviously it's harder to do that kind of volume when the market is doing less volume. Okay, but you can see that he's very, very consistent. Almost every day he's gross realized up. He is down 1, 2, 3, 4. There is no trading without losing. Losing is part of the game. It's part of the business. I lose and I'm wrong all the time. My wife reminds me of how wrong I am all the time. And that's a good question, because in prop trading, you know how much money this guy has up? Nothing. We back him. Okay, why? Because he's good. Okay, so his account size, since he has nothing up, he's got incredible, okay, amount of leverage. Sure. I could show you a loser for the day, because just like there are winners, there are losers every day. The good thing about what we do is what? We shut them off. We usually do 20 to 1, 10 to 1 to start, and then 20 to 1 thereafter. And guys, prop trading firm, it's not as bad as you think, because we manage the risk. So here's a guy who lost some money today. So scalp that worked, lost 350, made 60, made 40, lost 72, made 90, but he ended up being down $400. He still has about $100 worth of risk left for his maximum risk. Okay? So here's a guy who's just not having a good day. Okay? He's probably shorting everything, shorting a strong day. But we also have other guys that, here's a guy that's still in some trades, similar trades. And here he's short right now. GEOS, 1,300 shares. He's up 413 on it. He's realized up 315, and he's got another 478 on the table. Okay, so there's all kinds, and I have plenty of traders. We have about 150 guys that are still with us of the 350 that have taken our program. It's about 50-50. In trading, that's incredibly good rates. Because only the managers see the results. Okay, so there is a certain degree of separation required for regulatory reasons. All right, so the key to making money is by not losing too much, okay? So net profits are made when gross realized gains pay the trader fees and software costs, okay? And yes, part of our program is designed so that we pair up the guys that are struggling with the guys that are doing well. Now, sometimes the best traders aren't very communicative people. So, obviously an educator like myself comes in to kind of bridge those gaps. And a guy that's traded and educated and a guy that can trade and communicate well is not as easy to find as you may think, because you also have to be able to convey ideas, and you know, not everybody has that skill set. Okay, so net profits. I make money from a cut of profits and from trading fees, so we make money on both as professional trading firms. Okay. Net profits are made when gross realized gains pay the trading fees and the software costs. The road to profits is paved by small but consistent gains and small manageable losses. Okay? We take anywhere from 1 or 2% all the way up to 50% of profits. Okay, I'm not going to spend any time on more stuff on our training except teaching you the difference between technical versus discretionary entries. And I believe that this is one of our differentiating factors. Okay? Entries, stops, and targets. Okay? The three most important points in risk management are entry, stops, and targets. Entry, stops, targets. That is the origin of everything about risk reward. So the basics of trade management are how to take the risk out of the trade, how to get low risk entries, okay, and how to take the risk out of the trade. Okay, and the best thing I can do is to just bring you up an example that I already showed you from earlier. We do not trade futures yet, but we are in the process of registering with the onerous registration processes of the futures, the CFTC and the NFA. So we teach, right now we are in the process of getting the ability to teach futures. And we have a professional futures trader and a licensed futures trader as our instructor. Great guy, Smurfy. And that program is about to launch as soon as we give the CFTC and the NFA enough time to acknowledge what we're looking to do. Okay, we wrote them a nice letter about that. I'm very big into making sure that we're compliant. There's a lot of rules out there. So guys, here's a great example of a trade. So let's just say we bought the buy set up here, and I'm just going to, so let's say we bought the buy set up here, okay, at 42.06. Okay, we buy the buy set up. Our stop is, let's say, right underneath that level right there at 41.75. So we got 20 cents in the stock. So when the stock goes up 20 cents, okay, when the stock goes up 20 cents, we take our stop, we move it past our entry, and we say that trade has been taken to riskless. That is a better than break-even stop. So now, even in the worst case scenario, if the stock backs away, we've locked in the money that we've made. Or, at worst, we have a small gain or a flat trade. Does everybody follow me? Another way that you can manage risk is by selling half your position at the prior high. Yes, we do do some Forex trading through a UK affiliate. Okay? And we have Forex education as well in the works. Okay? Still, same answer as futures. We've let the CFTC and the NFA know, and we're waiting on our instructors' approval. And making sure all of our disclaimers are absolutely perfect. Okay? So one of the things that we like to teach is the difference between technical versus discretionary entries. And I really believe that this is the 15 years. I've been trading for 15 years as an educator since 2005 in my own company. So here we go. So we have a move up. Okay, it's looking great. We got a reversal bar. Pull back. Pull back. Pull back. 3 down bars. Look at that. We got a reversal bar. There's our technical entry. Question is, how can I get in here? Does anybody know how I can get in right there at the bottom? without the technical trigger? Happenstance, guessing. Nobody knows. All right, so let me go. All right, so let's look at this example here. We have the UAL example. We have a buy set up on the 5-minute chart. Well, let me drill down one time frame. If I drill down one time frame and I zoom in, and I take my trend line, and I go trend line break and fade. There you go. My trend line breaks. Okay, I could even go above that little doji-like reversal bar. Okay, and I take this little line and I bring it down, and I put it right there, and I go, okay. So now, based off of the 1 minute, that fits inside of the trend on the 15-minute, inside of the pattern off the daily, that little 1 minute gets me in at 41.99, just below the whole number, okay, which is a great technical entry on the 1 minute, okay? Now, can I get even lower? Yes, I could probably get a little bit of a better entry at 41.94. But that's about as good of an entry, as exact of an entry as you can possibly get by using the discretionary 1 minute, which is really just a technical entry on the 1 minute, is a discretionary entry on the 5 minute. So we teach you how to drill down, combine multiple time frames. It's a concept called convergence with persistence, okay, or confluence of time frames. Very, very tried and true technical setup. And we teach you how. So the answer is to use the technical entry on the smaller time frame. But it has to be a technical entry on the smaller time frame. Okay? The other thing that you can do is what? Also use the trend line, right? So you can use the trend line, okay, to get you an earlier trigger, which would be a discretionary entry. Does everybody see that? And yes, I have more tricks in my hat. Okay, there's your technical stop. Okay, I also have my technical target. T1 is R1 is resistance 1, T1 is target 1. Okay, so here we go. Move our stop to better than break even when you hit T1. Take the trade to riskless. Everything's going great. Guys, this technical analysis stuff really does work. And then, bum, 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 bum. Guys, how many of you have been there with me? Your palms get sweaty. You lean closer to the computer and you say, oh my God, I'm never going to make it as a trader. Why didn't I move up my stop? That's why risk management is so important. Guys, my father was a New York City cop. And my dad used to say, you know what, every day I put on my bulletproof vest. My dad was a New York City cop from the 1960s into the 1970s. He retired in 1982. He worked just south of Times Square. Okay? New York was a dangerous place. The one day, he used to say, the one day I don't put on my bulletproof vest is the day I'm going to get shot. Okay? Every single one of your trades needs a risk management, protective risk management rule. Does everybody acknowledge that? Now, guys, I know you're from all over the world. Okay? And you probably do all kinds of strange things. But do any of you leave the house naked? I know it's a funny concept. I know Raleigh might. They're a little interesting down there, over there in Austin. I'm just kidding. Okay, on holiday, yeah. No, we wouldn't leave the house naked, right? That's our clothes or our protective garb. Okay? Okay? You need to have risk management rules. That's why that's very funny. I like that. It's a good sense of humor. Yes, so you want to have protection. Okay? You want to have some kind of protective rule. Now, I'm not saying you have to put hard stops in there. Okay, I was not one of the original So's bandits. I'm a little too young for that. Okay. I think I'm, I'm young and still in my prime. I'm only 38 years old. Okay, so that makes me a little bit too young to be one of the original SOS bandits. They were generally in and around 1992, 93. But I was one of the ECN bandits, if you want to call us as ECN bandits. So I've been trading since 1998. Yes, I also trade out of a trading desk that I built in my house that I built on the trading desk that I built at my house. Okay, so I've been trading since 1998, doing active day trading and scalping techniques. At one point, we were doing over 60 million shares a month out of my house, scalping Citibank and BAC and Ford and all kinds of interesting stuff. And yes, we've pulled millions out of the market, okay, for many, many years running. And the concepts that I teach continue to work. Some of them are high frequency. Okay? So what we've developed is a multifaceted technical trading style with a focus on risk management and discipline. We teach trend, pattern, trigger, stop, target, TPTST. Okay? I'm very big on these acronyms and things of that nature. Okay? Trend, pattern, trigger, stop, target. Why? Because you don't forget them. Okay? We try to beat them into your brain. And if you forget them, I beat them into your brain again. And if that doesn't work, I have Gene come to your house. Gene, say hello.
Hey guys.
You don't want to see Gene. He's about 6'4". How tall are you?
About
6'4". How much you weigh? He's gonna get embarrassed.
80 pounds, size 15 foot.
Otherwise, we have Big Gene come. Yep.
Yeah.
Just don't. No, he likes you, Gene. All right, so guys, let's get on to some breakout setups. A sideways trending market with relatively equal highs and pivot lows. In a narrow range, increase in trading volume. Look for slightly higher pivot lows. Okay, notice the direction and the position of the moving average. Notice the volume increase. Okay, so here we are. Look for the slightly higher pivot lows. Look for the volume increase near those pivot lows. Okay, notice the slightly higher pivot lows are ending into the rising moving averages, the consolidation of those moving averages. Watch to see if that the volume picks up at reversal areas. Okay, a pickup in volume is relative to the prior periods. The breakout tactic, entry near the prior pivot lows, near the rising 20 SMA is a bonus. It's a plus, not a must. Okay, so the discretionary target is not near the top of the range. You got a little buy setup like pattern, okay? You got a little trigger on the 1 minute. That's the discretionary entry versus the 5-minute technical entry. Stop is below the majority of the prior pivot lows, okay? It's all right, Steve. We know where you live. We know where you live. Don't worry about it. I'm just kidding. All right, so stop below the majority of the prior pivot lows. Okay, look to the left for an initial technical target. Now, guys, anytime you have a break of resistance, okay, you have a break of resistance, that is a possible technical entry. Now, what I'm suggesting is possibly getting in before the technical entry. So if you buy 1,000 shares here, sell 500, buy 1,000, sell 500, buy 1,000, sell 500, buy 1,000, sell 500. You've traded the position to riskless before the actual breakout. Okay? Great way to enter the breakout. Aggressive option number 1. Okay, aggressive option number 1, the breakout of resistance. Sorry. Breakout of resistance. Discretionary entry. We already talked about that. Let's go to the technical entry. Entry on the breakout bar with increased breakout volume. Okay, stop below the majority of the prior pivot lows. A tight stop below the breakout bar once the bar is completed. That's called updating your stop, or tighter than technical stop. Look to the left for the technical target. Okay, very often I like to say we look for the measured move. Measured move is, this is the measure of one move. Okay, so there's the measure of one move. The other measured move concept is this. Boom, 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 boom. Okay, so we project the size of the range to project the size of the move. Entry option number 3. It's called the secondary breakout. So we move up, we pull back. What was resistance becomes support. We take the technical or discretionary entry on that little breakout. And we put a stop below the majority of the pivot lows, and we update our stop as soon as we can. So once it starts going in our direction, we tighten up our stop. We ratchet it up, ring fence our money. Okay? Stop below the majority of the prior pivot lows, tight stop below the reversal bar pullback once the bar is completed. And guys, why do we wait for the bar to complete? Because we want to know it's real. Once it's painted, it's on the tape, it's real. Okay? Target is to the left. Notice the slightly lower pivot highs. Notice the direction and the position of the moving averages. The 20 and the 50 SMA, simple period moving averages. Notice the volume at the reversal areas. Okay, it's higher than the prior periods. Aggressive entry option. Okay, trading the range breakdown. Okay, entry near the pivot highs, right? Try to get that discretionary entry before it even breaks down. Okay, stop above the majority of the prior pivot highs. Target somewhere down below. Look to the left for some clues. Entry option 2, breakdown. Shorting the technical breakdown should be on big volume. Okay, stop above the majority of the prior pivot highs. Look to the left for a technical target. Entry option 3, short the first rally after the breakdown. Now, guys, sometimes on a short, it might not rally, or you have to have your limit offer out there in order to get filled. Stop above the majority of the prior pivot highs, tight stop to the left after the breakdown bar is completed. First target. So each day the market can only do 3 things. Guys, before I go into this, I just want to show you something. I don't ever like to do anything without quantifying it. Beautiful breakout today. Buy the lows, sell the highs. There's the breakout range on UAL. Breakout, this would be the areas that you would buy, would be down here. Down here. There's the first step up. There's the breakout. These for all points. This is a buy setup. I'm going to cover that in a minute. There's the buy setup on the 5-minute. All right, so there's lots of opportunities to get into this beautiful trade. Now, guys, let's keep on going. Gap trades. The market can do 3 things each day. It can only do 3 things. Gap up, open flat, gap down. Okay? Trading and fading gaps is a very reliable way to trade the market each day. Okay? Novice gap, fade and fill. Okay? A novice gap is a gap that occurs in the direction. Up, down, and flat. That's right, Justo. All right, novice gap is a gap that occurs in the direction of a previous move. A very high percentage of novice gaps fade. A lower percentage fade than fill. Continuation gap is a gap that occurs in the direction of the previous move, but then does not lead to a reversal. Some novice gaps turn into continuation gaps. Okay? Novice gaps that turn into continuation gaps. Professional traders sum of their position on the novice gap and then put their position back on after a fade and fill. Now, guys, I'm just going to bring up one that was a really great fade, IGT. And I'm going to tell you why. Because the stock, it gapped up into resistance. Okay? On the open, it runs up, sucks everybody in. There was a nice little momentum long here, by the way. You could have taken that scalp long. But after it sucks everybody in and it breaks that low, the stock fades. Why does it fade? Because it gapped into crossed over moving averages on the daily chart. So it gets everybody sucked in and then takes their money and then it fades. Not only does it fade, but it fills. And when it gets to the fill point, it bounced. You see that? When it gets to the fill point, it bounced. So guys, what I teach is the playbook. Is if you ever wondered if there was a playbook from the market, you know, you have a playbook in football, you have a playbook in music. Okay, there is a playbook. There is a way to trade the markets. Okay, you got to know the playbook. Okay, what I teach is the playbook. You know why it's the playbook? Because guys like me in New York, okay, guys like me in London, guys like me, we all come from the same environment of tactics. It's like a dance. You need to know the steps, okay? When you have a couple that's dancing that both know the steps of the dance, they look like they move in fluid motion. Okay, but if you don't know the playbook and you don't know the steps of the dance, you're stepping all over your partner's feet. Okay? So, a pro gap is a gap that occurs in the opposite direction of the previous move. Very high percentage of pro gaps ignite a new move in a new direction. A lower percentage of pro gaps fade then fill. Okay? And if you want to learn more about gaps, you should come to one of my classes. I have great classes. We're going to tell you about that in exactly 5 minutes and 25 seconds. Okay, buy pullbacks. Buying pullbacks. Okay? You buy pullbacks, you must have a setup. You must have an uptrend. Higher highs and higher lows. For easy identification, 2 gently sloping moving averages up. Okay, a multi-bar pullback. Pullback should end near the rising SMA. Okay? The buy setup tactic is to wait for a 3 to 5 bar pullback, ending near the moving averages. And the best one that I can come up with today, I hate to keep beleaguering the point and going to UAL, but here is UAL. 1, 2, 3, 4 bar pullback. Okay, reversal bar. 4 bar pullback, reversal bar, beautiful buy setup. Do we have an uptrend? Yes. Okay, let's go through our little checklist. Do we have an uptrend? Yes. Do we have a multi-bar pullback? Yes. Did it break the technical entry? Yes. Okay? First target is the prior pivot high. Another technical target is the measured move. Guys, these measured moves, man, they work so many times. It's because we need a point of reference. That's the length of the first move. We take it and we measure it, and sure enough, that's exactly how far it was. Amazing. Absolutely incredible. Okay, so the next pullback, that's minor resistance, minor support. Okay, trendline break and fade is a way to get in. That discretionary entry concept again. Little 3 to 4 bar pullback. Okay, step up. Discretionary target would be just below the prior bars to the left top. Okay, trade management rule, use better than break even, trade the position riskless or hybrid. And I teach all these risk management rules. It's like a very, very systematic approach. Short selling rallies, the sell setup, lower pivot highs, lower pivot lows, need a downtrend, multi-bar rally, short the break of the prior bar's low, stop above the prior bar's high. Guys, you have to have it down pat. It's got to be ironed into your brain. Short selling rallies, okay? You got to know the playbook. If you don't know the playbook, you're a victim to it. Okay, here's the rallies. Technical entry, sell short below the prior bar's low, stop above the prior bar's high. Okay, first target at the prior pivot low. Okay, measured move is also possible target. Okay, take the trade in the direction of the trend. Guys, I'm a stubborn guy. I've fought trends many a times. I've learned not to do so. There's only a few times climactic buys and sell setups and some of the gap fade tactics that are counter trend. Okay, guys, I showed that this was a part of my regular program. Our 9-day program is $5,000. We're going to give you a link right now for you, everybody who's interested. If you go to the Affinity ATG ATG.Omnovia is our chat room. ATG.prop reports. I'm just going to put the link right in here. You'll get a 2-week trial. I know you're going to have, it's a little questionnaire. A little bit annoying. So anybody who fills this in, you can get a 2-week trial of all of our services. And we have a ton of services. Okay? Now, guys, we're also set up as a quasi-educational, quasi-professional trading company. And I say quasi because we're kind of, half in between. A lot of the companies that work with us, use us to train their traders. So the link that I'm giving you is for an experienced trader link. I do know Mike. Nice guy. Okay, I'm going to give you the link right now. Anybody who fills out your application, guys, you don't have to put in your social security number. It's just that we don't have any other application besides this one. Affinity Trading application. Okay. You can also email me. Okay. Everybody will get a 2-week trial of our services who fills out that application. Thank you very much, everybody. I hope you found my presentation insightful and interesting. And guys, our game plan is not to teach hundreds of people. We tend to teach anywhere from 5 to 10 new students a month. That's why we have a high success rate. Okay, our game plan is to make successful traders so that we profit with them. So we take a percentage of profits. So our goal is to be very personal, very hands-on. And, hopefully you decide to join us. We do 2 scholarships every month. We actually have a really cool class coming up in New York City where you can visit the New York Stock Exchange. It's kind of a trading experience program. If you have any questions about that or want to be a part of that, just email me. Thank you very much, everybody. Have a wonderful, wonderful rest of your Trade-A-Thon. And thank you for having me.
Thank you, Michael. We certainly do appreciate that.